In 1945, as Allied forces marched through the ruins of the Third Reich, they discovered something unexpected. Not in bunkers, not in bombed-out factories, but in the quiet, snow-capped mountains of a country that never fired a shot. Switzerland, the neutral heart of Europe, had become the silent vault of history's most blood-soaked fortune. Gold extracted from the teeth of Holocaust victims, art stolen from Jewish families, currency looted from occupied nations. And the banks, they didn't just store it, they laundered it, legitimized it, made it invisible. This is the story of how neutrality became complicity, how a financial system designed for discretion became a weapon of survival for the Nazi regime, and how decades after the war ended, some of that gold never came home. Welcome to the Wealth Timeline, where we uncover how money, power, and history are woven together to shape the world we live in. Today, we're entering one of the darkest financial conspiracies of the 20th century, one that still echoes in the vaults of modern banking. The illusion of neutrality. Switzerland didn't fight in World War II. It didn't take sides. It didn't invade. It didn't occupy. But it did something far more valuable to the Axis powers. It kept the money flowing. While Europe burned, Swiss banks became the financial arteries of the Nazi war machine, accepting deposits, converting looted assets, and providing the Reich with access to international markets that would have otherwise been sealed off by Allied blockades. Swiss banking secrecy laws, established in 1934, made it illegal to disclose client information. A banker who revealed an account holder's identity could face imprisonment. On paper, this was about protecting clients. In practice, it created the perfect system for hiding war crimes. But how did a small, landlocked nation, surrounded by fascist Italy, Nazi Germany, and occupied France, manage to stay neutral while simultaneously profiting from genocide? The answer lies not in diplomacy, it lies in gold. The foundation of financial secrecy. Switzerland's role as Europe's banker didn't begin with Hitler. It began centuries earlier, built on geography, stability, and a carefully cultivated reputation for discretion. Nestled in the Alps, Switzerland was a natural fortress. No empire could easily conquer it. No army could march through without bleeding. This made it the ideal place to store wealth during times of war. By the early 20th century, Swiss banks had become synonymous with privacy. Wealthy Europeans, fleeing revolutions, taxes, and unstable governments, flocked to Geneva and Zurich to hide their fortunes. Then came 1934. In the wake of the Great Depression, Switzerland formalized its banking secrecy laws. The official reason? To protect German Jews who were secretly moving assets out of Nazi Germany. But the law didn't discriminate. It protected everyone's money, including the Nazis themselves. And here's the twist. The very law designed to shield Jewish refugees from persecution became the same mechanism that would allow the Third Reich to launder stolen Jewish wealth. By 1939, when Germany invaded Poland, Switzerland had already positioned itself as the financial Switzerland of Europe, a place where money had no nationality, no morality, and no memory. The stage was set, the vaults were open, and the war hadn't even begun. The Golden Pipeline. Between 1939 and 1945, Switzerland became the Reich's financial lifeline. Nazi Germany was cut off from global markets. The Allies controlled the seas. Trade routes were blockaded. The German economy, fueled by conquest, desperately needed foreign currency to buy raw materials. Tungsten, oil, food, from neutral countries like Spain, Portugal, and Turkey. But there was a problem. No one wanted to accept Reichsmarks. The Nazi currency was worthless outside German-occupied territory. So the Reich turned to gold. Tons of it. Gold stolen from the central banks of Austria, Czechoslovakia, Belgium, and the Netherlands. Gold seized from Jewish homes, synagogues, and concentration camps. Gold melted down from wedding rings, dental fillings, and stolen art frames. The Nazis needed to convert this blood gold into clean, usable currency, and Switzerland was happy to help. The Swiss National Bank, Switzerland's central bank, accepted shipments of Nazi gold throughout the war. They knew where it came from. They didn't ask questions. Between 1940 and 1945, Switzerland processed over $400 million in gold transactions with Nazi Germany, equivalent to roughly $6 billion today. Some of this gold was pre-war, looted from national reserves before the Holocaust machinery ramped up. But much of it wasn't. It was victim gold, extracted from murdered Jews, melted down, and recast into anonymous bars stamped with Swiss insignia. The banks didn't just accept deposits, they legitimized them. They transformed stolen assets into neutral capital. They gave the Reich access to international credit. They kept the war economy alive. And they did it all under the banner of neutrality. But this power came with a cost, because every transaction left a trail. The awakening. By 1943, the Allies knew. Intelligence reports confirmed that Switzerland was laundering Nazi gold. American and British officials began applying pressure, threatening sanctions, freezing Swiss assets abroad, and demanding transparency. The Swiss resisted. They argued that banking secrecy was a matter of national sovereignty, that their neutrality required them to serve all clients equally, that interfering with private contracts would violate Swiss law. But the moral case was collapsing. In 1944, as the war turned decisively against Germany, Switzerland began negotiating with the Allies. They promised to freeze German assets, to stop accepting Nazi gold, to cooperate after the war, but they didn't. Even as Berlin fell, Swiss banks continued processing transactions. Accounts remained active, deposits stayed secret, and when the war ended, a new problem emerged: survivors. Jewish families who had deposited money in Swiss banks before fleeing Europe returned to claim their assets. The banks denied them. They demanded death certificates, impossible to obtain for victims of the Holocaust. They required account numbers that had been lost in the chaos of genocide. They hid behind secrecy laws, claiming they couldn't confirm or deny the existence of accounts without proper documentation. Families who had lost everything were turned away at the doors of the very banks that had profited from their persecution. And the gold, it stayed in the vaults for decades. The long cover-up. After 1945, Switzerland faced a reckoning. The Allies convened the Washington Accord in 1946, demanding that Switzerland return looted gold and pay reparations. The Swiss agreed to return 250 million Swiss francs worth of gold, a fraction of what they had processed. But the agreement had loopholes. It didn't cover private bank accounts. It didn't address victim gold that had been melted and recast. It didn't force banks to disclose dormant accounts belonging to Holocaust victims, so the banks stayed silent for 50 years. Survivors and their descendants fought legal battles, filed claims, and pleaded with Swiss authorities. They were met with bureaucracy, denial, and delay. It wasn't until the 1990s, nearly half a century after the war, that the truth began to surface. A night watchman at a Swiss bank discovered documents being shredded. Documents that listed dormant accounts belonging to Holocaust victims. He smuggled them out and handed them to Jewish organizations. The scandal exploded. International pressure mounted. The United States Senate held hearings. Class action lawsuits were filed. Swiss banks faced a global boycott. Finally, in 1998, Switzerland's two largest banks, UBS and Credit Suisse, agreed to a $1.25 billion settlement with Holocaust survivors. But even then, the process was murky. Thousands of claims were rejected. Many survivors died before receiving compensation. And the Swiss government maintained that the banks had acted independently, that Switzerland itself bore no official responsibility. The narrative had shifted. From we didn't know to we couldn't have known to it wasn't our fault. But the vaults remembered, and so did the survivors. The legacy of secrecy. Today, Switzerland remains one of the world's premier banking centers. It holds an estimated $2.4 trillion in offshore wealth. Roughly 1/4 of the world is cross-border private assets. Banking secrecy laws have been weakened under international pressure. In 2018, Switzerland began automatically exchanging tax information with over 100 countries. But the culture of discretion remains. Swiss banks still attract dictators, oligarchs, and kleptocrats seeking to hide ill-gotten wealth. They still offer structures, shell companies, trusts, foundations, designed to obscure ownership. The methods have evolved, but the function hasn't. And here's the uncomfortable truth. The Swiss banking system that enabled the Nazis was an aberration. It was the system working as designed. Banking secrecy doesn't distinguish between legitimate privacy and criminal concealment. A law that protects a dissident fleeing persecution also protects a warlord laundering blood money. The same vaults that hid Jewish assets from the Gestapo later hid those same assets from their rightful owners. This isn't ancient history. In 2020, a US Senate report revealed that Swiss banks had helped Russian oligarchs evade sanctions following the annexation of Crimea. In 2021, the Pandora Papers exposed how Swiss financial institutions facilitated tax evasion and money laundering for political elites worldwide. The names have changed. The mechanisms haven't. And the lesson is clear. Neutrality is never neutral when money is involved. Because in the world of global finance, secrecy isn't just a service, it's a weapon. The vault that never closed. So, what do we take from this? First, systems built for discretion will always be exploited by those with the most to hide. Banking secrecy was justified as protecting privacy. In practice, it protected power. Second, justice delayed is justice denied. The 50-year battle for Holocaust restitution wasn't just bureaucratic failure, it was moral evasion. Institutions that profited from genocide spent decades denying accountability. Third, the geography of money matters. Switzerland's neutrality wasn't ideological, it was transactional. By staying out of the war, it became indispensable to all sides. And in the end, it profited more than most combatants. The vaults that guarded Nazi loot during World War II are still standing. Some of the gold was returned, some was compensated, some simply disappeared into the system. And the broader question remains unanswered. How many other secrets are still locked in those alpine mountains? How many other crimes have been sanitized by the alchemy of banking secrecy? Because in the world of wealth and power, history never ends. It just changes hands. Enjoyed this story? Like, subscribe, and hit the bell. There are more secrets of power waiting to be uncovered. Thanks for watching.